Welcome to the Deep Dive. Today we're taking a close look at Samsara's Q2 fiscal year 2026 earnings. They dropped after the bell on September 4th, 2025.
And the market definitely liked what it heard. We've dug through the call, the deck, everything.
Yeah, our goal here is, as always, cut through the jargon, give you the core insights you need on Samsara and, the broader industrial IoT space.
It was a quarter showing really robust growth, some smart strategic moves too, especially in a market that's just crying out for more efficiency and operations. So let's unpack it.
All right, let's get straight to the numbers then, because they were pretty impressive across the board.
Definitely beat expectations.
Right. Non-GAAP EPS, that came in at $1.12. The consensus was looking for what, $1.07? So a significant beat there.
Yeah, a nice beat. And that's looking at their core operational earnings, stripping out things like stock comp, gives you a cleaner view.
And the top line.
Also strong, revenue hit $391.5 million. That's up 30% year over year. Also beat the street's estimates.
So solid growth there. And crucial for a SaaS business like this, annual recurring revenue, ARR.
Grew 30% year over year as well, landed at $1.640 billion.
And the really interesting part for me, maybe for you listening too, is the net new AR. $105 million. That actually sped up from Q1.
That sequential acceleration is key, right? It shows the sales engine isn't stalling out.
Exactly.
And remember last quarter, they mentioned some deals getting pushed out, those Liberation Day tariff impact.
Yeah, the elongated sales cycles.
Well, they confirmed on the call that all those big deals that were held up, they all closed in Q2. So that definitely helped this quarter's numbers, and it looks like that headwind is gone now.
Good to see that cleared up. Okay, so growth is solid, momentum looks good. What about profitability? Because that's the other side of the coin.
Equally impressive, I'd say. Non-GAAP gross margin ticked up a point year over year to 78%. Solid. But the real standout was the non-GAAP operating margin, 15%. That's up 9 percentage points from last year.
Wow, 9 points. That's huge leverage.
It really speaks to that durable and efficient growth story they keep emphasizing. They're scaling, but they're doing it profitably.
And that flows through to cash flow too, right?
Absolutely. Adjusted free cash flow margin came in at 11%. That's up 7 points year over year. So yeah, strong operational leverage kicking in, more cash dropping to the bottom line.
Which investors love to see. And what about keeping existing customers happy and spending more? The net retention rate.
Still holding steady around their target, about 115%.
So existing customers, on average, spent 15% more this year than last year. That's excellent stickiness.
That is. And it shows that land and expand model is working. They get in, and then they successfully cross-sell more products and services.
Okay, let's shift gears a bit. Talk about how they're driving this growth, the strategic pillars, large enterprises seem key.
Definitely a huge focus. They now have, get this, 2,171 customers paying them over $100,000 a year in ARR.
2,771, wow.
And that group makes up about $1 billion of the total ARR, grew 35% year over year. So the big fish are biting, and they're growing fast.
And even bigger fish too, right? The $1 million plus customers.
Yeah, this was a record quarter for that cohort. They added 17 new customers with over $1 million in ARR.
17 in one quarter.
Yeah. And that group, the $1 million plus club, now accounts for over 20% of their total ARR. So roughly $350 million. Shows they can handle those really large, complex deployments.
And they mentioned some big new names too. Alaska Airlines, SRM Concrete.
Right. SRM is the biggest ready-mix concrete provider in the U.S., also a Fortune 1000 rental equipment company.
And public sector wins as well. Nebraska, DOT, City of Nashville, LA Transit Agency.
Yeah, state and local governments are definitely waking up to the savings and efficiency here. It's not just private industry. The range of wins really shows the platform's flexibility.
Okay, let's talk innovation, because their data is a huge part of the story.
Oh, absolutely. That proprietary data asset, they're now processing around 20 trillion data points a year.
Trillion.
Yeah.
It's hard to even comprehend that scale.
And it's unique data, right? For physical operations, you can't just buy this data set elsewhere. It's the bedrock for their AI stuff.
And AI is clearly a big push. They rolled out a lot at their Samsara Beyond event in June.
A record number of launches, yeah. Things like a redesigned driver app with gamification for coaching.
Makes it more engaging for drivers, I guess.
Exactly. And AI-enhanced vehicle inspection reports the DVIRs, using voice-to-text photo validation, making a tedious but critical task faster and more accurate.
Smarter workflows, not just more features.
Precisely. Plus real-time risk alerts like Weather Intelligence, StreetSense, new tools for asset maintenance, commercial navigation, route planning, AI multicam for 360 video, worker safety solutions. It was a lot.
Is this new stuff actually selling?
Seems like it. They said 8% of their net new ACV, so new contract value in Q2, came from products launched just in the last year.
Okay, so tangible results.
Yeah, and asset tags were leading the charge there. They even signed their biggest ever asset tags deal with Bonnie Plants, 15,000 tags to track. Well, plants, presumably plant racks or delivery assets.
Tracking plans. Shows the breadth of applications.
It really does. And it ties back to solving customer pain points, safety, costs, worker turnover, helping them do more with less.
And it's not just their own tech, right? The partner ecosystem matters.
Hugely important. Over 350 integrations now on their app marketplace. And large customers use an average of 6 integrations.
6. So Samsara becomes the central hub, connecting different systems, makes it stickier.
Exactly. It's not just a standalone tool, it's part of a bigger operational tech stack. Which brings us to another big strategic move this quarter.
The PDI program.
Yeah, the pre-delivery installation program. They announced a partnership with Daimler Truck and Fontaine Modification.
So Samsara hardware gets installed on new trucks before the customer even gets them.
Right. Factory or modification center installed. For you thinking about market reach, this is potentially massive. It's streamlined setup for the customer, gets them value faster.
And it could embed Samsara as almost a default option on new vehicles. Opens up a whole new sales channel.
Could be a real game changer for distribution down the line. Definitely one to watch.
They also beefed up the board. Gary Steele, the former Splunk CEO.
Yeah, bringing in someone with that kind of enterprise software data and AI scaling experience, that's a strong signal about their future ambitions. Serious enterprise credibility.
Okay, let's pull back a bit. Look at the market context. What trends are helping Samsara?
Well, a big one is this massive global build-out of AI infrastructure. Think data centers, fiber networks, power grids.
And Samsara's customers are the ones doing the build?
A lot of them, yeah. Construction, field services, utilities, their core base. These industries are right in the thick of it. And they need efficiency, safety, visibility more than ever.
So Samsara provides the tools to manage those complex physical operations more effectively, riding that wave.
Exactly. Helping optimize those huge operational budgets, vehicle maintenance, fuel, labor, the stuff that's like 80% of their revenue, often. Less discretionary spend.
Makes sense. And which specific industries are driving the most growth for them right now?
Construction is still the king. Led net new ACV for the 8th quarter in a row. Just relentless demand there.
8 quarters, wow.
And manufacturing had its best quarter ever for net new ACV mix, helped by that big SRM concrete win.
Public sector showing strength too, as we mentioned.
Definitely gaining momentum. And internationally, things look good too. 15% of net new ACV from outside the US and Europe actually accelerated. Highest level in 4 quarters.
So broad-based strength. How are they standing out from competitors in this space? It feels crowded sometimes.
I think the key differentiator is the platform approach. Many competitors offer point solutions, just telematics, or just dash cams, or just asset tracking.
Fragmented.
Right. Samsara brings it all together on one unified platform, fueled by that massive, unique data set we talked about. 20 trillion data points.
That integrated view must be powerful for customers.
It is. And they focus on showing a clear, fast ROI, solving multiple problems across safety, efficiency, sustainability, rather than just competing on price and discounting heavily.
Plus the open ecosystem with all those integrations, and now the PDI program adds layers to their moat.
For sure. It makes them harder to rip out and replace compared to a simple point solution.
All right, so looking forward, what did management guide for Q3 and the full year?
They raised guidance across the board, pretty confident outlook. For Q3, they're expecting revenue between $398 and $400 million. That's about 24% growth year over year.
Then margins?
Non-GAAP operating margin guided at 15% again, and non-GAAP EPS between $11 and 12 cents.
So maintaining that strong profitability. And for the full fiscal year 26.
Revenue projected between $1.574 and $1.578 billion. That's a 26% year-over-year increase at the midpoint.
Nice raise there.
And full-year non-GAAP operating margin also guided at 15%, with non-GAAP EPS expected between $1.45 and 47 cents.
So the takeaway is continued confidence in durable growth, expanding profits, fueled by that AI demand, and big customer wins.
Exactly. It really cements their position as, a critical system for managing physical operations.
And hitting that rule of 40 consistently, what is it, 6 quarters in a row now?
Yeah, 6 straight quarter. Revenue growth plus profit margin easily clearing 40%. That signals a really healthy, sustainable balance, which is rare for high-growth tech.
It really differentiates them. And those strategic plays, the Daimler PDI deal, Gary Steele joining the board, feel like they could unlock significant future value.
They're setting the stage for the next phase of growth, embedding themselves deeper into the ecosystem. Even with some uncertainty in enterprise software spending overall, Samsara seems to be benefiting from these powerful secular trends, AI build-out, digitizing physical operations.
Okay, so putting it all together, strong quarter, raised guidance, smart strategic moves, the market clearly likes the story. Now, for you listening, let's transition to our This Is Not Financial Advice segment. Time for a wild but plausible trade idea.
All right, given the momentum, the AI angle, the PDI potential, my wild but plausible idea here isn't just buying and holding, it's a specific options play.
Okay, let's hear it.
I'm thinking a long call spread. Specifically buying the September 2026 50 strike call and selling the September 2026 65 strike call.
Okay, a 50-65 call spread expiring in about a year. Break down the thinking there. Why that structure?
Well, the core thesis is that the market might still be underestimating the AI and data monetization potential here. Management talks about the AI infrastructure build-out, that massive 20 trillion data point asset.
And Gary Steele, coming on board from Splunk, adds fuel to that fire.
Exactly. It signals a serious intent to maybe move beyond just per-device pricing, maybe monetize insights derived from that data in new ways. Think predictive maintenance across entire supply chains, not just one truck. Or maybe a premium operational intelligence platform tier.
Okay, so betting on a bigger AI story unfolding. And the PDI program.
That's the other potential kicker. If that Daimler deal, and potentially others like it, really takes off, it fundamentally changes their distribution model and market penetration speed. It could make them an industry standard much faster.
So the call spread lets you capture upside if this thesis plays out.
Right. If the market starts pricing Samsara less like a telematics company and more like a foundational AI provider for the physical economy, maybe driving significant multiple expansion, this 50-65 spread offers substantial potential gains up to that $65 level.
While defining your maximum risk, which is the net cost of the spread.
Precisely. You get leveraged upside exposure to that re-rating story over the next year, but your potential loss is capped. It's a bet on accelerated AI adoption and the PDI program being genuine game changers.
A bet on Samsara becoming the AI brain for the physical world.
Got it. Okay, that definitely qualifies as wild but plausible.
That's the idea.
All right. That wraps up our deep dive into Samsara's Q2 FY26 earnings. A really strong quarter showing solid financials, big wins with large customers, and a clear strategy centered on AI and that unique data advantage. It really was impressive execution. And it leaves us with a key question for you to think about. How do you see that pre-delivery installation program, the Daimler deal, impacting Samsara's long-term competitive moat? Especially as everything in the physical world gets smarter and more connected, driven by AI.
Something to chew on. And, as always, remember this discussion is purely for informational purposes. It is absolutely not financial advice. Please do your own research, consult with a qualified financial advisor before making any investment decisions.
Definitely.
Thanks for tuning in to The Deep Dive. We'll catch you on the next one.